welcome back to AskACPA.co. If you're new to the channel, make sure you hit that subscribe button down below and hit that bell icon to be notified whenever new videos are released. Today we have a question from Britney in Boulder, Colorado. So Britney asks, I've been in the corporate world for a long time and I'm ready to go out on my own. I am starting a new consulting business this year. What type of entity should I form? Now, this is a very important question, Britney, and honestly, it depends on a number of different factors. Making the right entity choice can have a significant impact on your business's success and legal obligations. So let's dive in and take a look at a few of the different entity types and some of the considerations that you need to be aware of. Now, before we dive into the entity choices, let's quickly go over the different types of business entities that are available for entrepreneurs. The most common ones are sole proprietorship, partnerships, limited liability companies, S corporations, and C corporations. Let's take a look at each one very quickly. A sole proprietorship is probably the simplest business entity to form. It's easy to set up and you have complete control over your business. However, keep in mind that you have personal liability for any debts or legal issues within the business. A partnership is formed when two or more individuals decide to start a business together. Partnerships share profits, responsibilities, and liabilities. It's essential to have a partnership agreement to outline the terms and conditions of your business's operations. Now, an LLC provides you with the flexibility of a partnership while offering you limited liability protection as members of the business. This means your personal assets are separate from your business liabilities, so LLCs have more formal structure and require proper registration, but can be owned by a single owner operator or have multiple owners. Now, an S corporation is similar to an LLC in partnership in that it's a flow-through business, but an S corporation is different in that income, expenses, distributions, and contributions must be made in proportion to your ownership interest. S corporations have special rules, but they are a popular choice among profitable operating businesses because they minimize the amount of self-employment tax that is paid. Now, a corporation or C corporation is a separate legal entity from its owners. It offers the highest level of liability protection, but it requires more extensive legal formalities and ongoing compliance. Now let's go over some factors to consider when selecting the right entity choice. Now that we know the basic types of entities, let's discuss some factors to consider when choosing the best entity type for your new business. First, let's look at liability protection. So if you're concerned about protecting your personal assets, opting for an LLC or a C corporation might be the right choice. These entities provide a legal shield between your personal assets and the assets and liabilities of the business. Now, tax considerations. So different entities have varying tax implications, so I would recommend consulting with a tax professional or CPA to understand how each entity type may affect your business tax obligations, plus your deductions and your potential tax savings in your entity structure. Now, with that being said, some entities are flow-through, meaning that the income and expenses flow through to you personally, and the business by itself does not pay any taxes. It's all paid at your personal level. Now, this would include sole proprietorships, partnerships, S corporations, and LLCs. C corporations are subject to what's known as double taxation. They're first taxed at the entity level, and then again when dividends are paid to the shareholders. This is the reason why most small businesses steer away from C corporations to avoid this double taxation. Now, there are situations where a C corporation would make sense if you're considering taking on public debt or you're going to use a ROBS or another retirement plan to help fund the initial startup costs of the business. Now, consider whether you want to have complete control over your business or share decision makings with partners. Entities like sole proprietorships or LLCs provide more control, while corporations have a more complex management structure. Now, if you plan on seeking outside investment or plan on taking your business public in the future, a corporation might be the best choice. It offers more options for raising capital through issuance of additional shares. Now let's discuss some recommended entity choices for different types of businesses. For a small business or a solo entrepreneur, a sole proprietorship or LLC can be a suitable option. Now they provide simplicity, flexibility, and LLCs even provide liability protection. Now what I typically recommend to operating companies is known as the entity progression. Now this changes your entity type as your business grows. When you're starting a business or testing out an idea, it's important to test that your idea actually works and see if there's a market for your business. Now this can be done using the sole proprietorship, but once your business has begun taking on new customers and generating some revenue, it's time to set up an LLC. Once your LLC is profitable and making over $50,000 of net income a year, then it's time to move on to the S Corporation by making an S election and filing a 2553. Now the S Corporation is more beneficial because it minimizes the amount of self-employment tax paid by you, the owner. Now partnerships and joint ventures can benefit from forming an LLC or a limited partnership known as an LP. Now these entities allow partners to define their roles, responsibilities, and profit-sharing agreements. Now these are great for real estate holding companies or investment type entities when you're looking on taking on outside capital. Now if you have a high growth potential business or are seeking investment from outside investors, incorporating in a C corporation can have its advantages. It allows you to issue different classes of shares to attract investors. Now if you're planning on issuing public debt, this may be the best entity type for you. Choosing the right entity type for your business is a crucial decision. It's important to weigh the benefits, the drawbacks, and the long-term goals before making a choice. Remember to consult with an attorney and CPA to provide the best personalized advice based on your specific circumstances. That's all for today's video. I hope you found this information helpful in your entrepreneurial journey. Don't forget to hit that subscribe button down below, and we'll see you in the next video.